Good friend Dr. Makali Mulu was saying, if you go through the recommendations of this committee's report, indeed, we will need to do very little if all these recommendations are adopted, or rather, since we are likely to adopt them, if they are implemented by the National Treasury. Honorable Speaker, allow me to pick up from where the member from Homa Bay, the Honorable Karoli Omondi, has stopped on the single treasury account. And I remember, Honorable Speaker, last year, during debate of this same report, we had this recommendation. And I think the danger is that we only put it as a recommendation with no timelines. And I was wishing, how I wish the committee had put specific timelines. But this also points to a problem also with the House Implementation Committee. Because once the House resolves, we cannot be doing things in vain here. And we purpose to have a committee of implementation, not to just hold meetings in rooms up here and wait for allowances, but to hold meetings and follow up on all House resolutions. And I don't think there's any other resolution that is as important as the resolutions we make on finance matters, and especially around the issue of debt. Because, Honorable Speaker, this single treasury account, and I remember about 6 or so years ago, saying in this House, there are bureaucrats in government who will never allow, at their own volition, the implementation of the single treasury account. Because they are minting hundreds of millions by holding money in bank accounts, getting kickbacks from commercial banks. And that is how it is, Honorable Speaker. And I have no fear of contradiction when I say that, because I know. I have been an auditor in this country. I have worked in the financial services sector. I know what happens. And therefore, Honorable Speaker, it is up to the implementation committee of this House to ensure that this particular recommendation on the single treasury account is actualized. And how I wish that even as we move, Honorable Chair, you would insert a small amendment to put a timeline on the implementation of this treasury single account. Give them probably 30 to 45 days. To Honorable Speaker, because like the society we are in, Honorable Speaker, we as a House and as a country, we all live in the same country. Last year, during the State of the Nation address, none other than President William Ruto pronounced himself right in this House and asked the National Treasury that by the first quarter of 2025, everybody must be on e-procurement. We must ask ourselves, are we now towards the tail end of the second quarter, are we on e-procurement in all sectors of government? Because, Honorable Speaker, if there is no follow-through to these pronouncements, if there is no action being taken by those who ought to be taking action, and that is none other than committees of this House that must ensure that whatever is pronounced in this House is implemented, Honorable Speaker, then we will go through the motions every year saying have a single treasury account. The President will pronounce himself on the question of e-procurement, but it will never be done because people are eating heavily from the manual procurement processes that exist, Honorable Speaker. And I've seen, Honorable Speaker, in some of these government parastatals, interestingly, you find a procurement process that is tailored or skewed in a way that it will only go to one contractor or one service provider. PPRA jots down an opinion and attempts to stop that procurement. 2-3 weeks later, the same agency, PPRA, gives a go-ahead for that procurement process. Then you wonder, why in the first place then do you seek to stop that procurement process? And all these things can only be brought to an end if we go to e-procurement, Honorable Speaker, and that is why we must support what the President pronounced himself on the question of e-procurement, because it has a bearing on our debt levels. The huge amounts of pending bills emanate from procurement processes that take forever. And people procure towards the end of the financial year, like now, incur expenditure, but you don't pay, and they are rolled over to July in the new financial year. They end up accumulating into pending bills, Honorable Speaker. And therefore, we must be the ones to assist the President. We must be the ones to assist, not the President, but the country, because ensuring the implementation of a single treasury account is helping Kenya. Implementation of e-procurement by the National Treasury is helping Kenya. And I hope the Cabinet Secretary and National Treasury and his Principal Secretary are listening. And if they are, because they are coming here tomorrow, I hope to hear in his statement tomorrow an update on where the National Treasury is on implementation of e-procurement across all sectors in government, Honorable Speaker, including the National Assembly and Parliament as an institution. Because, Honorable Speaker, you also chair the Parliamentary Service Commission, and it is also an arm of government. Honorable Speaker, moving on to some of the other recommendations on the opportunity cost that is arising from interest being waived, and especially for the case example that were given, or rather I have seen in the report of Kenya Airways, that government borrows money from T-bills at a rate of 9 or 10%, then you lend the same money to KQ at 3% or 5%. Why? Why can't Kenya Airways go and borrow from the market at 10%? Because you're basically subsidizing a private company as much as government as a shareholder in that company. And therefore, we must be careful that if we are borrowing money to on-lend to another government agency or a government parastatal, then it must be lent to that parastatal at an equivalent interest or probably at a small premium. Kenya Airways, if they couldn't get a commercial loan at 15%, why can't they pay that loan if we borrowed at 9%, at 10 or 11% or 12%, like in Asako? And it will still be at a discount compared to the commercial loans that they would otherwise have gotten, Honorable Speaker, because this is where we lose money. And as the chair and the vice chair, Honorable Makali, were saying, or rather the immediate former vice chair and a diligent member of this committee, Honorable Makali, were saying, we continue to lose money that way. Two, Honorable Speaker, is a question of commitment fees that we are paying for loans. And again, the committee has rightly noticed, I noticed in the observations, that, Honorable Speaker, this is emanating largely from loans that we have committed to, but we do not allocate or give adequate money, appropriate adequate money to pay the counterpart financing or the financing that ought to come from the government of Kenya. And it's in all sectors, especially the water sector. I have seen many, many projects in the water sector, in the energy sector, and a few in the road sector where you need counterpart funding. And because money during budget making process is not appropriated, adequate money to pay for the counterpart funding, then you end up not having these loans disbursed. You have paid commitment fees. At times you have even paid insurance against those loans. And that is money lost because you are not deriving what you ought to have derived from the money you ought to borrow, Honorable Speaker. And I'm glad I had about 2 or 3 weeks ago the Comptroller of Budget speak to the same issue about commitment fees, interest that we pay and insurance that we pay on these undisbursed loans. And we therefore must ensure that for every loan that we sign for, because the National Treasury, there is no loan that will be signed for by anybody in government, whether it is those in the energy sector, whether it's in the water sector, whether it is Kenya Airways that you are guaranteeing, there is no loan that will be signed for that the National Treasury is not aware. And if one hand in the National Treasury is the one signing for these loans, and the other hand is preparing the budget estimates, what is so difficult to ensure that you have provided adequate resources to pay for the counterpart funding and commitment fees so that we don't continue incurring costs. And therefore, that's why I want to agree with Honorable Makali and the committee that if we implement all the recommendations of this committee, and now that I see Honorable Makali just walked back in, I was saying, Honorable Makali, if there is somebody who has let us down as a house and as a country, is our own implementation committee, the Committee on Implementation. Because all these recommendations that we make here, year in, year out, it is up to that committee to follow up. I would wait for the day I see the Cabinet Secretary, National Treasury, the Director General in charge of public debt, the Principal Secretary in the National Treasury, before the implementation committee telling the country why it is taking them so long to have a single treasury account, while government continues to borrow its own money, because government largely is borrowing its own money. If you look at the money being held by, for instance, the Kenya Roads Board in commercial banks, you'll be shocked. Even road agencies that owe billions to contractors, you will find them holding money in bank accounts. Look at the bank accounts of the National Lands Commission, Honorable Speaker. You'll be shocked. Money lying there, idle money that is being used by the commercial banks where they have banked to trade and trade with government, lend it back to government, government pays at an interest. And Honorable Speaker, if that is not insider trading, I don't know whether it's insider trading or whatever it is, Honorable Speaker, but we are saying we are guilty as charged, very guilty, because these are simple things that should take a very short time to implement, and I must challenge our implementation committee to ensure that the National Treasury and all other agencies that are charged with implementing many of these recommendations in this report and other previous reports are implemented fully, so that we realize the gains that we ought to realize and save on our public debt spending. Honorable Speaker, if you read through this report, you see between 2015, 2016 to now 2025, 2026, the committee is telling us that the public debt interest payments as a share of our GDP has grown from 3.2% in 2015-2016 to a projected 5.7% in 2025-2026. Very huge leap, almost doubling, because is just 0.7% to be double what it was about 10 years ago, Honorable Speaker. Consequently, as that number goes up, the development expenditure has also been going down from a high of 7.2% in 2015-2016 to 3.5% in 2025-2026. A country that is spending 3.5% on development expenditure, Honorable Speaker, as a share of GDP, cannot grow at the rate that we want our country to grow. We must devote more money to development expenditure. And Honorable Speaker, I noticed that as much as a committee speaks about other sources of financing, off-balance sheet sources of financing, Honorable Speaker, we must commend at least this administration. For the first time, a number of the huge infrastructure projects are happening from the fund, the housing fund, like the housing that is going on, that is helping to spur economic growth in the country. But you can imagine what would happen if we had that level of investment going in the construction of roads, construction of dams and water ponds across the country to ensure that people have adequate water, there's enough water storage capacity in the country to cater for our use during the dry season, Honorable Speaker. It would spur very good economic growth in the country and therefore reduce on the amounts that we have to borrow, Honorable Speaker. Lastly, Honorable Speaker, is on resource mobilization. And I know this is usually a very uncomfortable debate to engage with anybody. Right from Caesar's time in the Bible, when Jesus said, give unto Caesar what belongs to Caesar, and give unto God what belongs to God. We are coming to that season, Honorable Speaker, when we must, and I look forward to hearing from the Cabinet Secretary tomorrow on the revenue-raising measures. But as we speak about debt levels, we must bear in mind that, as also we passed the expenditure estimates this morning, we must bear in mind that that goes hand in hand with the level of resources that we are able to mobilize locally from our own taxes. Because unless and until we are able to mobilize adequate resources to cater for expenditure, then we will continue to expand on our fiscal deficit, and that expansion of the fiscal deficit ends up with a lot of public debt borrowing or increased borrowing from our public coffers, or rather to finance our public expenditure. And therefore, Honorable Speaker, in the interest of time, allow me to end there, but close by again appealing to the chair of to ensure that they have ensured that all these recommendations in this committee's report are implemented fully. And particularly, Honorable Speaker, I have a